Hello, and thank you for joining us. I'm JJ Slager from the Miami University Alumni Association, and I'm so pleased to be joined by Dr. Arthur Carvalho today from the Farmer School of Business at Miami. Today's topic, a gentle introduction to Bitcoin, is obviously timely and has drawn a lot of interest. We have an audience of nearly 500 viewers, including Miami students, faculty, staff, parents, and friends, and alumni from the classes of 1951 all the way to 2020. So thank you to all of you for joining us. Special welcome to the class of 2021 who will become alumni this weekend. Because we have such a large crowd today, we won't have time to get to all of your questions, but we still welcome participation live. We'll have some time for Q&A at the end of Dr. Carvalho's presentation. So thank you to those who submitted questions ahead of time. I want to make sure that you know you can also submit live questions throughout the webinar by clicking Ask a Question below your video on the ALC platform. All right, let me introduce today's faculty presenter. Dr. Arthur Carvalho is the Dinesh and Ela Paliwal Innovation Chair and Assistant Professor of Information Systems and Analytics at the Farmer School of Business. Having developed one of the first blockchain courses at the undergraduate level in the US, Dr. Carvalho has led the blockchain-related educational endeavors at Miami University. He has published extensively on topics related to blockchain governance, adoptions, and applications. So he's a perfect presenter for this topic. Dr. Carvalho, thank you so much for joining us, especially during exam week. I will now turn it over to you.
Perfect. Thank you so much, JJ, and thank you for the introduction and the invitation to be here. It's going to be my tremendous pleasure to spend a few minutes talking about Bitcoin and cryptocurrencies, broadly speaking. So let me now try to share my screen with everybody. And I'm going to ask you, JJ, if I have some technical problems, just please let me know here. But you should all be able to see my screen now. Can you see my slides fine, JJ?
That looks good. Go ahead and hide that box, and we are all set. Thank you.
Thank you so much again. So again, my name is Arthur Carvalho. I am an assistant professor in the Information Systems and Analytics, Farmer School of Business. I'm also the Paliwal Innovation Chair. Over the years, I have been working on so many different blockchain and cryptocurrency projects. I'm now in the advisory board of some promising startups. Believe it or not, I'm actually the content consultant for a cryptocurrency book for kids that grades from 3 to 6. I'm also one of the advisors to our Miami University Blockchain Club. And now it comes a shameless advertisement. If you're looking for talent, look no further. We have amazing kids here, incredibly talented kids from technical all the way to more business-oriented folks who understand blockchain and cryptocurrencies really well. So again, we got you covered if you need talent. I'm also teaching blockchain and business applications here at Farmer School of Business. That was one of the first blockchain courses developed in the US. And as JJ said, I published quite a few papers on cryptocurrencies, blockchain governance, adoption, and applications. So the goal of this presentation today, it's more educational in nature. We will learn about Bitcoin in a gentle way. It's kind of simplified, perhaps even oversimplified way. There are so many technical details here that I try to remove as much as I could. But we will learn about Bitcoin, how it works, at least some sort of a bird's eye perspective, bird's eye view. There are some of the questions we will be asking and trying to answer today. The number one, when we start talking about Bitcoin, why do we have this KYC and AML problems? So if you don't know what KYC is, it stands for Know Your Customer. So if you go to a bank and you try to open a bank account or get a credit card, the bank will ask you for ID, proof of residency, and many other documents. That's because the banks have to comply with KYC regulations in the US. All right, so I'm going to mention why Bitcoin has some KYC issues. And likewise, we have money laundering issues as well. So again, AML stands for anti-money laundering. And again, Bitcoin will have quite a few of these problems. The second question, one of the questions people ask me often is, what about electricity? Right now, as of today, believe me or not, Bitcoin consumes about 0.6% of the electricity produced on Earth. Okay, so why is that the case? Why does Bitcoin, this single technology, consume so much electricity? Then we start talking about decentralization. There is no centralized entity here. There is no bank. There is no central bank. Bitcoin is a whole financial system without an owner, without a centralization, a centralized entity. So how does that work? And eventually we talk about more practical things. How can we purchase Bitcoins? I mean, what are the steps I have to follow to actually buy maybe 10 bucks, 20 bucks in Bitcoins? So my agenda today for my presentation, when I talked to JJ, when I got the invitation, I asked JJ about the audience. Who will be my audience? And JJ said it could be anyone from incredibly technical folks to folks who are trying to understand the technology from the very basic. So I'm trying to cater for everybody here in my presentation. And that's the plan for today. I'm going to speak a few minutes about history and the size of these rectangles and squares. They kind of represent the amount of time I'm going to spend on each topic. I'm going to talk about history first, move to technology. Now I'm going to explain how Bitcoin actually works. And then by the end of my presentation today, that's going to be the money talk. That's when we will talk about how people actually make money or lose money by purchasing cryptocurrencies. All right. So before we begin, traditional disclaimer, whatever I say here, any information provided in this presentation does not, and it is not intended to constitute legal or financial advice. So that's the number one question I get from folks is, should I buy Bitcoins? And I know that that can disappoint some of you, but I never answer that question. So you will never see me or hear me saying, yes, buy, or no, don't buy. Okay, so no financial, no legal advice in my presentation. So let's talk about history now. A little bit of history. So Bitcoin was proposed in 2008, 2009 by an anonymous person. And pretty much nobody knows who that person is. But that person called himself or herself Satoshi Nakamoto. So Satoshi Nakamoto was part of a movement, much bigger movement in the 1990s that was called the cypherpunks. So the cypherpunks at that point in time, about 25, 30 years ago, they used mailing lists. Think about mailing lists as like old school forum that we see today on the web, like Reddit, Twitter. 20, 30 years ago, this would be kind of the equivalent. The cypherpunks, they used these mailing lists to talk about online privacy. Just keep in mind the date here. We're talking about the 1990s. So the web was in the very beginning here. But these folks got together and started talking to each other like, we have to do something to prevent others from intercepting and looking at our communications, our online communications. So that is the cipher aspect of the name, because they discussed often the use of cryptography. How can we use cryptography here to secure our communications? Now, the second part of the word punks is because of the kind of revolutionary or libertarian inclination of many folks in these groups. So if you search on Google for cypherpunks archive, you will find so much information, all the discussions there, everything is available. What you will see there will be a bunch of folks talking about protection, privacy protection, and primarily related to the government. How to keep the government, broadly speaking, out of our online endeavors. So that's kind of the punk aspect of the cypherpunks name. And the idea behind Bitcoin The idea of a completely decentralized and 100% online currency was discussed often there, often as a way of separating money from the government, to break this monopoly that governments usually have over issuing money. All right, so that is a little bit of the history behind Bitcoin and the cypherpunks movement. And again, if you're interested in reading the discussions, it's widely available on the web. You will see that there are amazing discussions, highly philosophical, ideological discussions, all the way to kind of crazy conspiracy theories and anything in between. Okay, so that's the history, but what is Bitcoin? I'm going to explain very soon, slightly more technical, but not that technical, how Bitcoin works. But in a nutshell, if I can give you a description in terms of three properties, Bitcoin will be, number one, an online currency, like dollar, but online. You can never print a Bitcoin. You can never hold a Bitcoin. If you turn off all the computers on Earth, Bitcoin dies. It's completely online. And it's part of a category of currencies called the cryptocurrencies. Why crypto? Because it is online currency that relies heavily on cryptographic tools to make all the communication safe. All right, so this is the first one. If you see currency, I have the quotation marks before and after, because it depends who you ask. Some people will tell you, yes, Bitcoin is currency. Others will tell you, no, it is not. It's actually commodity. Others will tell you it's actually property. So we will not get into that discussion here today. But what I want to say is there's not really consensus on what Bitcoin is in terms of these terms I mentioned before. So number one, it's online currency. Number two, it is anonymous. So anyone, you at home, anyone, we can trade Bitcoins. I can send to you, you can send to me without ever using an ID, like a driver's license, a passport. There's no requirements at all for you to know who I am and for me to know who you are so that we can get in a transaction. There is no requirements whatsoever. Third one, it is decentralized. There is no central authority at all. So Bitcoin will be a whole banking system, or even broader, a financial system, without a Federal Reserve Bank that will control the supply of money, without a Treasury Department to actually print or create money. There are no such things here, but nonetheless, we are able to have a fully functional financial system. Okay, so that is, in a nutshell, Bitcoin. All right, so, but how does it work? Now I'm going to explain. Again, I tried as much as possible to give you a lot of information without being overly technical. So I'm going to explain now the inner workings of Bitcoin, how things actually work inside this cryptocurrency. So one question you can ask is, well, if there's no bank, if there's a transaction between you and me, where's that transaction stored? What is the system or the IT infrastructure that will store that transaction? And if there's no treasury, how does money get into the system? How can we actually print money? So I'm going to answer some of these questions as we progress today, but I'm going to ask you for a favor now. I'm going to introduce three concepts, and I'm going to ask you to try to memorize these three concepts because I'm going to be using them throughout the presentation today. So the concept number one is going to be called nodes. Think about nodes as computers. I'm going to use nodes because that's the right and technical term, but the nodes, roughly speaking, it's a bunch of computers. These computers will be connected together in a network. I'm going to call this network of computers a blockchain network. I'm going to explain what blockchain is very soon. Bear with me. But now, whenever I have a transaction with you, whenever I send you one Bitcoin or you send me something, that transaction, that information will be stored inside every single one of the computers in my blockchain network. Okay, so concept number one, nodes. Concept number two, blockchain network, which is a collection of nodes, a collection of computers hooked up together in a network. Now, let's go to concept number three. That's us, users, you and me. We will use the system, we will create transactions, and these transactions will be stored in our IT infrastructure, in our information technology infrastructure. So even though I'm going to refer to users as human beings like you and me, users can be IoT devices, Internet of Things devices, sensors, other computers, and so on. But to simplify the discussion, let's assume that users are human beings. Okay, so three concepts: users, nodes, blockchain, network. So let me start now by talking about this guy right here, the blockchain network. Okay, first thing you have to keep in mind, the blockchain network for Bitcoin is public. What does that even mean? Public means that anyone, again, you, me, your best friend, your kids, your parents, anyone can join the network, can have a node here. I actually show in class, when I'm teaching this course, about blockchain course, I show in class how it takes 6 clicks. Once you download the software and open the software, it takes 6 clicks to take your computer to join the blockchain network. So anyone can do that. And anyone can send transactions as users too. Now, it's time to pause here and think for a second. I told you before that all the transactions will be stored inside these computers. And I'm telling you now that anyone can join the network and store transactions. What does that even mean now? It means that all the transactions are effectively public. So if I send you some Bitcoins, that transaction is public, is available to anyone and everyone. Now we have some serious privacy issues here because I don't want my transactions to be public. If I go to Walmart here in Oxford and buy some food, I don't want that transaction to be known by everyone. So how do we fix that problem? So Bitcoin will replace privacy in transactions with anonymity. So now we don't necessarily have privacy in a sense that the transactions are open to the public. However, the users, just remember, the users are anonymous. There's no information about the users at all. The user here we will never be able to see the name of the user, the real name, where the user is, if the user is even a human being or not. All that information is replaced with an identifier. So every single one of the users in the system has only one ID, which is semi-random. So let's now answer the first question I mentioned before. What about the KYC and AML issues? You can see the issues right now. So if I don't really know who a person is, a person creating a transaction, well, that person can send money to, let's say, bad guys, like terrorists. A person can use the whole network and send money to terrorists or some illegal activities, like buying illegal drugs, and we don't really know what's happening there. We only see the IDs of these people plus the amount of money in the transaction. Now you can see the know your customer issues. Money laundering too. You can see the money laundering issues here. Think about the Hollywood movies, when the bad guy is buying like drugs. The bad guy usually has this bag with huge amounts of cash there. And they use cash, of course, because you cannot really trace cash. If the bad guy is going to buy drugs using American Express, guess what? Now the transaction is traceable back to that person. So to avoid this traceability issue, they use cash. But it is really inconvenient to use cash because you need a lot of cash. What about using Bitcoin? Now again, bad guys can use Bitcoin in transactions and be relatively safe because they cannot be identified. So that's the kind of dark side of Bitcoin. This anonymity, it's nice to kind of preserve privacy to a certain degree, but we have the flip side of the coin. All right, so that said, let's understand now a transaction. What is a transaction inside this blockchain network? So remember, a transaction is when I send you money or Bitcoins, or you send money to me or Bitcoins. So let's understand what happens when we have a transaction, how this transaction is processed. Let's assume now that we have two users. Again, we know nothing about them. The only thing we know is the user number one, the gentleman here in my screen. We only have the ID of that user, nothing else. And then we have the lady on the other side. We know nothing, just the ID. And that's all what we need to start a transaction. So let's assume now that the gentleman wants to send 1 Bitcoin to the lady. Just remember, Bitcoin, you cannot really print Bitcoin. It's completely virtual. This person cannot really send Bitcoins straight to the lady. What happens is the gentleman will send a command, a transaction, to one of the computers in my blockchain network. And all the information about balances and transactions will be stored inside the network. So what is a transaction? In a very, very, very simplified way, a transaction will be something like a data structure. Think about what I have in my screen, a few fields there. It has a from, someone, to someone else, the value, Bitcoin, and now we have all that cryptography stuff I mentioned before. We need to sign the transaction so that we know that the user sending money is actually who says he is. We use now digital signature. I'm not going to get into the technical details here, but if you want to do some research on this topic, that's what we call asymmetric encryption, public-private keys. I'm not going to go there, but that's the cryptography part of creating a transaction. Okay, so that's how it works first. The user, the gentleman, creates this transaction right here inside his computer. The gentleman will use some specialized software and will send the transaction to one of the computers in the blockchain network. All right, so what happens next? How is that transaction processed? Let's understand how the transaction is processed. And now that's the craziest part of the presentation today. What comes next looks like science fiction, but that's how it actually works, like bird's eye view. Step number one, the gentleman sends the transaction. The computer that received the transaction says, the node says, hold on for a second, I'm not going to process your transaction right now. I'm going to take your transaction and put the transaction in a block with many other transactions. Why? Because we can actually show mathematically and empirically that if we process blocks or batches of transactions, it's actually faster. There's something called throughput, a technical term. Roughly speaking, it is faster on average than if we process each transaction individually. So the transaction is not really immediately processed. It is put in a batch, in a block of transactions. But now we have problems. You think about the blockchain network. The first computer can be here in Oxford, Ohio. Another one can be somewhere in Russia. Another one in China, India, South Africa, Brazil, and the list goes on. Now, we have issues because these computers will have different blocks. At any time, we can have hundreds of people sending transactions to different computers now. Now, these different computers will naturally have different blocks with transactions. Now we have the question, which block of transactions do we process first? Because we have all these competing blocks. Now, the computers in the blockchain network, they have to come together and build consensus. They have to come together and say, hey, that's the block that we will process everybody, and we will all be on the same page. Let's see how that works now. Let's build consensus. Now, if you understand this slide, you will understand why Bitcoin consumes so much electricity. So to build consensus, Bitcoin uses what's known as the proof of work mechanism. That's how it works. And you have to believe me in certain things here. It works like this. Every single one of the computers, of the nodes that have a block, you can derive a problem specific to that block, a computational problem or a puzzle. And that puzzle is unique to your block. All right? So again, there's a lot of cryptography here, a lot of technical stuff. So I'm going to ask you to trust me. There's a block, and from every single one of the blocks, we can derive a computational problem. So what does that even mean? It means that every single one of the computers in my blockchain network will now have one problem, computational problem, to solve. Now, whoever solves the problem first will be the quote-unquote, the chosen one, the one that will be able to come forward and say, hey, everybody, drop your blocks, let's process my block, because I was the first one to solve the puzzle. Now, how do you solve this puzzle? You guess the answer. Try to guess it. It's like, I'm going to ask you, what's in my mind? You have no idea. You have to keep guessing what's in my mind. So nodes can only solve their puzzle by guessing the answer. Now, let's put this all together. We have all these computers with competing blocks of transactions to be processed. Now, let's pick one. Which one? Well, let's have a competition now. Whoever solves the problem first will have its block processed. Now you can see the energy consumption issue. If you have a very powerful computer, I will try to beat you up and get another even more powerful computer so that I can be the winner, the first one. But now, as soon as you see my computer, you will get another one even more powerful. And we have this game now and this race going on, and all these thousands and thousands of computers all over the world consuming a ridiculous amount of electricity just to be the winner and to propose a block. Okay, so that's the issue. And as I mentioned before in the beginning of the presentation, as of yesterday, 0.6% of the world consumption of electricity is because of Bitcoin. 0.6%. It's more than Sweden, a country of 10 million people. All right, so if you want to see these numbers, go to the website cbeci.org. Again, cbeci.org. They have all these numbers about the consumption of electricity by Bitcoin. But okay, at this point here, we have a winner. Someone will be the first one. All the others will be like, okay, I lost. So what happens next, step number 3, is the other nodes, the other computers, receive the block from the winner, and they verify if everything looks good, if the solution is good, if the transactions are good. If everything looks good, all these transactions are now processed by everyone in the network. What happens next is every single one of the computers, they will take a block of transactions, the accepted block, and link to a previous block. When we have now a chained block, we have a blockchain, because now we have all these blocks chained together. And that is the very famous blockchain that pretty much everybody's talking about now. Okay, so again, that's the whole process that happens behind the scenes. As users, we don't actually see that happening. That happens, again, by the computers that keep the network alive. So if you lost me there, let's wrap up here. Let's summarize what I said before. Okay, so that's the time for us to come together again. So brief summary. So again, we have financial transactions going on. You and me, we can send Bitcoins to each other. So first, I can create a transaction using specialized software called wallets. I'm going to talk about wallets very soon again, but I'm going to create a transaction using wallets. I'm going to send that transaction to one of these computers in the blockchain network. Now, these computers will collect transactions and create blocks of transactions. Because these computers are in different places, now we have competing blocks of transactions to be processed. Next, one single node, one single computer is the winner, and that computer gets the right to propose a block. Now, the proposed block will be validated by the others, the other nodes, the losers, and now all the nodes, if the block is fine, they all come together and say, good, we are on the same page now. Let's process the transactions in this specific block. This process right here, from this bullet point number 2, all the way to the last one, we have rounds. It happens over and over and over and over. And each round takes about 10 minutes on average. So on average, again, we have 10 minutes, and then we have another block and another block and another block, and so on. So at the end of the process, what we actually have here, that every single computer in my blockchain network has a data structure called a blockchain. So what is blockchain? Blockchain is a ledger. For those of you who have a business background, is a ledger where we keep the transactions. We keep transactions like Arthur sent you 5 Bitcoins, you sent someone else 3 Bitcoins, and so on. So it's a ledger, but it's a very specific ledger. Number one, it is distributed. The ledger is not in a single place. It is inside many computers. Number two, the ledger is decentralized, which means that these computers that have the ledger, they can belong to different people. Not a single bank, not a single organization, but pretty much anyone. Number three, it is tamper-proof. Again, the tamper-proof component here means if I sent you 2 Bitcoins before, and you or someone else tries to hack the system and change that number 2 to number 5, we can easily detect that change. So that's why we say that blockchain is tamper-proof, because of some cryptographic techniques. So in a nutshell, that is Bitcoin. Again, it looks like science fiction, but if you look carefully, it's actually really, really beautiful technology. Now, it's time to move from technology to the money talk. There's one specific point here that I hope some of you guys are asking yourselves, like, if I'm a node, I'm just wasting electricity there. What's in it for me? And now it comes the money part. So what are the incentives to keep your computer 24/7 trying to be the winner of this proof of work competition? The benefit here is money. Whoever is the winner, that computer can print Bitcoins out of thin air. And that's how money gets into the system. Remember, there is no treasury here printing money, but somehow money has to be printed. How is money printed? Whoever proposes a block, that person can pay himself or herself some money. That person can add one transaction in the beginning of the block that says, nobody is sending money to me. And that's how money gets into the system. It's printed out of thin air, pretty much. And that's why nodes are also called miners. At least some nodes trying to make money by printing Bitcoins. So what's a miner? So think about miners and gold miners. These gold miners, they go to different places. They try to find gold. They miss. They go to another place. They miss. And we have many miners competing against each other. But eventually, the miner will be the first one to find gold and that miner will be rewarded. So again, the idea is the same here, because we're trying to find solutions to this proof of work problem randomly. We behave like gold miners. Now, the question you can be asking yourselves now, okay, I want to make money. I want to print Bitcoins. How can I do it? Can I use my computer now in front of me and become a miner? And the answer is yes, you can. And the truth is, chances are you will just really waste electricity, because the computers now that actually get money, the winners of this proof of work process, these computers are so incredibly powerful that standard computers, standard laptops, they don't have a chance, to be honest. It's actually easier to make money if you buy a lottery ticket as opposed to use relatively cheap computer to become a miner. So again, we're talking about incredibly powerful computers, and sometimes many of them in a cluster of powerful computers. So moving on, talking more about money. So how much money or Bitcoins can a node print right now? Remember, that happens every 10 minutes. So the winner right now can print 6.25 Bitcoins. At the time of writing, that was $350,000. So that's a lot of money. So because it is a lot of money right now, you can imagine how powerful the computers mining these Bitcoins are. And one interesting point here is this money right here that people can print is halved every 4 years. So if it is halved, does that mean that it will eventually be zero or get close to zero? And the answer is yes, because it is going to be halved and halved and halved, and there is a lower bound limit. It means that eventually, around the year of 2140, the last Bitcoin will be printed. At that point in time, if you sum all the Bitcoins ever printed before or minted before, that will give you this magic number, 21 million Bitcoins ever. The world can only produce 21 million Bitcoins. So let me pause here and talk about what's happening all over the world. So because of COVID-19, of course, now we have governments all over the world, not only in the US, trying to make sure that the economies are back. They're handling some stimulus checks, giving people some money, people who need money. The flip side of the coin is something evil called inflation. So here in the US, we are having that discussion now of having very high inflation very soon. Now, some of the companies who have a pile of cash in reserve, they are like, well, this money in a few months from now can be less valuable because of inflation. Is there any asset that is quote unquote inflation proof, that has a stable release of new currencies, that people cannot just print money out of nowhere? And of course, the answer is maybe cryptocurrencies, maybe Bitcoin. So that's why I start seeing some companies now investing some from a few $1 million to a few $1 billion in Bitcoins. Some of them concerned about the impact of inflation on their cash reserve. Now, let's go back to the presentation now. So just keep in mind that eventually, after 2140, nodes can still collect money. They still have, they're able to make money. So they will no longer be able to print money, but they can also always collect transaction fees. So if I'm going to send you 1 Bitcoin, but in my transaction, I actually say 1.1, the leftover, the 0.1, will actually be collected by whoever proposed the block with my transaction. So in other words, there are transaction fees. Every single one of the transactions that you propose, you have to pay some fees there to get that transaction processed. And these fees will go again to whoever print money, whoever proposed the block that your transaction is in. Now, just to wrap up, before I have a live demonstration, Bitcoin is beautiful. I mean, it's really beautiful technology. And I speak as a computer scientist. When I look at how the technology works, all the components, that's incredibly beautiful. And note one thing. Note how the nodes, the infrastructure providers, it can be anyone, you, me, any person. Note how they have incentives to keep the whole system alive. Because if they keep alive, they can make money by printing Bitcoins. Now, number two, note how the money in circulation is dictated by the technology. There's no central bank. There's no treasury here printing money. There's no central bank trying to control the flow of money or interest rates. It does not exist here. Bitcoin will be a whole financial system without a central authority. And number three, because we don't have a central authority, we don't have one specific company, organization, or person to store the transactions. The transactions will actually be stored by anyone who wants to. So that set of transactions will be replicated across many computers. Why? Because if we replicate across many computers, we don't have to trust anyone individually. Again, the trust issue is solved. Now, let's talk about how to acquire Bitcoins. Some of you are asking now, okay, that's cool, that's awesome. I want to buy Bitcoins. I want to get some, I want to try. Number one, you can go the hard way, invest a lot of money to buy powerful computers and use this for mining purposes. That's a huge investment up front. Well, let's skip that one today. You can get Bitcoin from others. Again, you can be a user in this whole network with 0 Bitcoins, and someone can just give you something, and now you have something. But again, we don't find people like that too often willing to give Bitcoins for free. Let's skip that one as well. Third one, you can actually buy now from centralized exchanges. So there are companies like Coinbase, Robinhood, PayPal. It's so easy today to buy Bitcoins. But there's an issue here. When you use this exchange, just keep in mind that it is no longer anonymous. Because to create an account in this exchange, you have to provide information about yourself. Because this exchange, they have to comply with KYC. Now, they are able to link you personally to your Bitcoin ID. And that could be a problem. There's no more anonymity here. Fourth option will be you can buy stocks of companies that invest in Bitcoin. So there's a specific company called MicroStrategy. They are buying Bitcoins like there's no tomorrow. Why? Because investors can buy stocks related to MicroStrategy and indirectly invest in Bitcoin, has some exposure to Bitcoins, because Bitcoins will be now part of the assets of MicroStrategy or other companies. Okay, so I'm going to focus on number 3. I'm going to try to do something very dangerous now, which is a live demonstration. So I'm going to pick one of these. Heads up, I'm a user of every single one of these services. I'm going to pick Coinbase just because it is a very famous company. It went public a few days ago. It is valued at $80 billion, give it or take a few. So that's the only reason. I have no stakes in Coinbase. I'm not doing any advertisement here. Actually, I am doing a free advertisement here. But just to make that clear, if you try to open an account on Coinbase, the first step is you will click on this link, get started, and eventually you get to this screen right here. Who are you? First, last name, social security number, and the list goes on. So again, Coinbase, an American company, has to somehow comply with KYC. It is well known that Coinbase sends data to IRS, to the FBI. So again, it's a kind of a serious company that complies with regulations in the US. Just to keep in mind that anonymity is over. So as soon as you create an account here, I'm going to show you now, and I hope you will be able to see my screen. And I'm going to ask you, JJ, if I'm having any technical issues to help me here. But I hope you can see now Coinbase in my browser. Okay, so looking at my browser now, you can see all the cryptocurrencies that are supported by Coinbase. I'm right here, third icon, looking at the prices. So right now, the price of Bitcoin, $55,000. The price of Ethereum, the second most popular cryptocurrency, $4,000. Coinbase supports up to 60, if I'm not mistaken. You will see a lot of cryptocurrencies there. And of course, today we only focused on Bitcoin. So let's say I want to buy. How do I buy here? I'm going to now click on this buy button. But the problem is, as soon as I click on buy button, it will show you how much Bitcoins I have. So what I'm going to do now, I'm going to hide my screen for a few seconds. All right. I'm going to hide my screen. I'm going to click on buy in my second screen. And I'm going to change from Bitcoin to something else, like Cardano, another cryptocurrency. Now I have 0 Cardano. My balance is 0. Let me bring it back now. Now you can see it back now. Now, let's say I want to buy cryptocurrencies. I click on this button. You have a list of cryptocurrencies you can buy. I select the fourth one. You can see here how I have 0 balance. I never purchased Cardano before. So how do I buy now? You can select payment method. Like I have my bank here, PNC, but you can also buy using PayPal, bank accounts, debit cards, wire transfer. You can add any payment you want to. All right, so add the payment. Now, how much can I buy here? You can buy, if I remember well, as low as $2 of cryptocurrencies. You don't have to buy like 1,000, 10,000, 20,000. You can put $10 here. It's perfectly fine. So let's try $10 now. Okay, I'm going to preview my purchase. I'm going to click on buy, and that's what it gives me. Right now, based on Coinbase order book, my $10, I'm going to pay, look at the fee. It's very high. Coinbase is known for very high fees as well. Close to 10% of my money will be fees. The $9, the leftover, I can buy approximately 5.3 Cardanos. Okay, so, and if you buy more beyond $10, this percentage here that you pay in fees decrease tremendously. If I'm not mistaken, if you have $100, it's going to be like 3.5% that you pay in fees. That's the money that will go towards Coinbase. So say that you buy some of these cryptocurrencies and you want to sell them, the idea is the same. If you go back here, if you click on sell, you can specify which one of the cryptocurrencies you want to sell and where that money will go to, like your bank account, and it's over. You click, it's done. So that's how easy it is. All that crazy stuff I mentioned before, like proof of work and energy consumption, it happens behind the scenes. These are the nodes. As users of the system, we see this beautiful interface. Again, it abstracts away all the crazy complexity. All right, so let me go back to the presentation now. Just to finalize the presentation today. So today I mentioned about Bitcoin. That was one very specific cryptocurrency. I tried as much as possible to explain some of the inner workings of Bitcoin. And I'm talking to JJ and some colleagues from alumni engagement on future talks. We actually want to come up with a summer series, if you will, talk about other cryptocurrencies like Ethereum, the famous now Dogecoin, concepts like smart contracts or decentralized finance, or even tokens like the big thing now, NFTs, non-fungible tokens, or even more broadly, kind of put cryptocurrencies aside and talk about blockchain. How can we use blockchain to solve some interesting business applications? So that's going to be it for now. From my side, I'll be very happy to answer questions. And please feel free to stay in touch. My email is over there. My LinkedIn, the link to my LinkedIn as well. Feel absolutely free to stay in touch. And back to you now, JJ.
Awesome. Thank you so much, Arthur. That was very informative. We really appreciate your time and sharing that. So we do have a ton of questions. In fact, I would venture to say that out of 150 online events we've done in the last year plus, you may have broken the record for questions. So,
oh goodness,
I'll take that as extreme interest, but I'll also apologize to the viewers who won't get their questions answered because we won't get to them all. We can go a little past one if that's all right with you, Dr. Carvalho.
It's perfectly fine. I have a pile of assignments and final projects to grade, but I can always apologize to my students and use a few more extra days here and there.
All right, sounds good. All right, well, let's start with the value of Bitcoin because a lot of people asked, and I'm going to read a question from Jim Ricks from the class of '84. How does one value Bitcoin other than perceived scarcity? How is the investor supposed to assess the value and determine whether to invest? A couple other people asked, is it like gold? Is it just the market, or is there some intrinsic value? So can you talk a little bit about that, please?
That's a fantastic question. It's going to be really, it depends really who you ask this question to. The thing is, value is going to be very subjective here. You have to understand the nature of cryptocurrencies. When you have companies like, let's pick one, random one, Microsoft, we can try to estimate value there because Microsoft has assets, buildings, cash reserve, produce products and services. There is something there that we can use to estimate value. We can think about cash flows as well. Cryptocurrencies, these are algorithms. These are like pieces of code running on the web. I mean, that's why some investors are like Warren Buffett says, there's nothing there. It's a tremendous risk to society. How do you even value? Now, to your question, my answer is, and that's my answer. Again, if you ask other people, you'll likely get other answers. But my answer to your question is, it's all about perception. It's valued how much I believe it is valued. For some people, Bitcoin is valued 0. Others, so it's like $100,000. When we start trading these things, we converge to a price. Okay, so again, it's about perception. If we collectively, as society, if we come together and say Bitcoin is valuable and we put the price tag there, then it becomes valuable because we all collectively agree on that. But again, the fundamentals will not be the same as with traditional assets like stocks.
Got it. Okay. Question from Don Hopkins, class of 1970. How does China's digital currency fit into this mix?
Oh, that's a fantastic question. That's another very hot topic now. What I want you first, before I answer that question, let me make a kind of a clarification separation here. The cryptocurrencies we talked today, like Bitcoin and Ethereum, Bitcoin primarily, they are decentralized, which means you can join the network, I can join the network, I can be a node, I can be the user. But now, because cryptocurrencies are so popular, many governments are like, hey, we need ours, or we risk Bitcoin becoming incredibly popular. So now we have what's called CBDC, which stands for Central Bank Digital Currency. And that's the one that was spoken about. China is perhaps the biggest economy that's playing with some of these currencies now. China is running a pilot right now with the digital yuan. So the way it works now, at least in China, is they develop a whole system where users can kind of have accounts there. Users can use this system and have wallets inside their cell phones and make transactions, have transactions, pay stuff, sell stuff, get money, and so on. But I want to emphasize that this kind of blockchain applications or cryptocurrencies are not the same as the ones I mentioned before. They're not like Bitcoin. Actually, these currencies here, like CBDCs, they are highly centralized in nature. Like you will never see financial transactions with digital dollars or digital yuan completely public. It's not going to be public. And there are some people criticizing China now that what they're trying to do with this currency is to have even more control over people. Because they now, if everybody uses that system, they can monitor very nicely there how people spend money and with whom they transact. Again, there are some good aspects as well for CBDCs. One bad one is if it is badly implemented, it means it's actually more centralization because the government will have access to more data, transaction data, financial data.
Okay, great. Thank you. So we have a parent, Chris Cook, who says, have you read the book, The Deficit Myth, Modern Monetary Theory, and the Birth of the People's Economy? If so, you're smiling. I'm guessing that's a yes. If so, how do you envision countries that are in control of their own currency to move off their currency for a crypto-based currency?
Oh, that's okay. That's a fantastic question. I'm glad you cannot really see my office like 360 because it's a mess. But I keep books close to me. Actually, this book that was mentioned, it's The Deficit Myth. I actually read that book in December last year. But in a nutshell, to answer that question, I have to explain what modern monetary theory is first. What modern monetary theory says is this. Countries, certain countries, which we call monetary sovereign countries in terms of currencies, these countries should not behave like households. Let me explain that. In my home, together with my wife, we have some income collectively. And we try to keep that income above our expenses so that we do not run deficits. If we do run deficits, we have a problem. We will lose our home, we lose cars, we lose our lifestyle. Now, countries should not necessarily behave like households because countries, they can print money, like governments, at least at the federal level. It can print money. So if it can print money, it does not necessarily have the issues that we, in our households, that we have. So that's kind of the basic premise of modern monetary theory. But what they say there is, we have to keep an eye on inflation. Stop being obsessed with balancing budgets. Run deficits, it is fine, as long as inflation is good, inflation is low. So inflation will be how we measure under or over spending. Okay, so that's the introduction part. That is MMT, Modern Monetary Theory. Now, back to the question. If I remember well, JJ, and I apologize, I might have to ask you to repeat the question. But if I remember well, the question said, given the MMT, how will governments transition from their currencies to cryptocurrencies? Correct? And my answer is they won't. Because, think about currencies like dollar. It gives you a tremendous amount of power. Why would you go away from dollar to Bitcoin? Let me be very precise here. Let me give you one specific example. Think about, I believe the date was 1979. Give it or take a few years there. So the US signed an agreement with Saudi Arabia and other countries. That agreement said oil has to be priced in dollars. And that was good. It brought some stability to the oil prices there. And now Saudi Arabia and other countries, they had some surplus of dollars, which we call the petrodollars. They can use that money to go back to the United States and hire companies to build the infrastructure in Saudi Arabia and, buy weapons for the military and so on. Now, oil is priced in dollars. See how nice it is for countries like the United States. Because if I have an enemy, if I'm a country, I have an enemy, I can impose sanctions on my enemies. And I can say that my enemies will not be able to be part of financial transactions involving dollars. In other words, my enemies cannot really get dollars anymore, which means they cannot buy oil because the oil will be priced and sold in dollars. So you can see how currencies, they can go way beyond what we actually use on our daily lives to buy stuff. It's actually about geopolitics as well. So my view here is countries will not really give up on that to go to Bitcoin. On the contrary, I strongly believe that if Bitcoin becomes incredibly popular, countries will start to ban Bitcoin, like India is trying to do now, like Turkey did some time ago. And in the United States, I don't believe there will be bans, but some regulators can put regulations to take Bitcoin, to make Bitcoin out of existence, pretty much regulate Bitcoin out of existence. That's an indirect way of banning. But again, long answer, making it short, no, I don't believe, even under the MMT lens, I personally don't believe countries will give up on that power of their own currencies.
Okay, thanks. So I know we've just hit 1 o'clock here on the East, and some of you may have only booked an hour for this. We'll do a little more time of Q&A, and if you want to watch that later, we'll have the recording on the same link as the registration where you're watching this if you're on the ALC site. All right. A few people have asked about Dogecoin. You mentioned it. Can you touch on that? I think it's, I don't know, up something like 12,000% this year, and we even had a question from the YouTube comments from Andrew, Dogecoin to the moon. So can you touch on Doge for us, please?
Absolutely. I guess some people will perhaps hate me. I guess hate is too strong, but dislike me after my answer. Before I actually answer that question, let me give you some background information about my strategy, and that's mine. It's not advice here. My investment strategy. So when I'm going to buy cryptocurrencies, number one, I only invest money I can afford losing. So you will never see me putting my retirement money or the money I'm saving to pay for my daughter's university. You will never see myself putting that money in cryptocurrencies because of the huge volatility there. Number two, I do something I don't traditionally do with stocks. I monitor very closely cryptocurrency prices, okay, because can have wide fluctuations in a single day. So pretty much every single day, many times in a day, I'm looking at the prices. Number three, and that's going to be important to my answer about Dogecoin, research. I do a lot of research before I invest money. Now, what about Dogecoin? Dogecoin, the first aspect I look at is the technical aspect. I'm a computer science guy by training. I look at the white papers, look at how things work. Dogecoin is nothing new. It's a copy of something else called Litecoin. It's like almost copy and paste. Number two, I look at the value proposition. So what's the value proposition there? And there's no value proposition. I cannot find one for Dogecoin. All right, so Dogecoin was born out of a joke, like literally. Two people got together, they joked about dogs, they created a cryptocurrency, which is ridiculously overpriced today. So when I look at Dogecoin, it's like the technical stuff is not there. It's born out of a joke. I'm not buying it. I mean, to me, chances are it will crash. However, that's my opinion. And I want to offer the flip side now. People considerably more important than me, Elon Musk, Mark Cuban, Snoop Dogg, and a few others, they're all in. These are for the young guys, that's the cryptocurrency. They don't care about the technical stuff. That is what everybody's talking about. Let me jump on board and buy as well. Again, that's not necessarily my style. So I'm concerned about the whole field because of Dogecoin. Because deep inside me, and that's an opinion, that's not a fact, that's in my opinion, I believe Dogecoin will crash. And once it's crashed, a lot of people will lose money. When a lot of people lose money, regulators will come all over the place saying, we have to prevent that again. And now that can kill very serious projects that we have now. So these are my concerns. I hope you guys don't dislike me as much, but yeah, I'm not a fan at all of Dogecoin.
Interesting. All right. Well, we have you on one side and Snoop Dogg on the other. So, I mean,
Yeah, who's this boring Arthur guy? I'm dealing with his dog any day.
all right. I'm going to ask a few more if that's all right. This is interesting. If Bitcoin is anonymous and decentralized, and even the founder is not known who it is, who updates the IT and cryptography systems?
Oh, that's a fantastic question. That's a fantastic question. So one thing I forgot to mention in my presentation, most of the cryptocurrencies today, at least the most popular ones, are open source. You can actually I do that in our classroom when I'm teaching here. We can download the Bitcoin source, the whole source code, and build a copy of Bitcoin precisely the same as the original one and run locally. So that's what I do here when I'm teaching. And now we have this huge open source community. We have people who can propose change to Bitcoins, and it's a nightmare. We get now into the governance because it is highly decentralized. We have to talk about the governance of these cryptocurrencies. Whenever someone proposes something new, some of the people who have, let's say, stronger or louder voice will be the miners, because they will be the first affected folks, because any change the software can affect their business, how they make money. But again, anyone can, in theory, come up with ideas and propose. There is a formal process to do so. So what happens after is the community get together, they discuss proposals, and they develop a new version of the software and debate online. So who does that? Some people do it for free. Some companies like Coinbase and others, they actually donate money to developers so that developers can be full-time developers just for these few cryptocurrencies. Some companies now, they invested so much money in cryptocurrencies that they take some of the staff to help with development too, because they have a stake in the game now. So yeah, I mean, the governance issue, it's always a nightmare because again, there's no honor here. People have to somehow agree with each other, even when they don't.
Okay, sounds good. So we have a few people asking something pretty similar, basically about how to use it. I'll read from Caroline Nightingale. How can you use your cryptocurrency to buy something, i.e. university tuition? I guess the other one is why would someone use cryptocurrency rather than a credit card and a transaction? So can you talk about how it's used either now or what that might look like in the future, please?
Absolutely. So you have apps, you have applications all over the place, services. So when you want to buy something, let's say you want to go to Starbucks, and inside Starbucks, you want to buy a coffee. And let's say that Starbucks accepts Bitcoin. So what you would do is you would take your smartphone, you would have an app there, and chances are Starbucks will have some sort of a barcode. Then with your app, you scan that barcode. That barcode will give you the ID of Starbucks. Then you click a few times or press a few times, a few buttons like make a payment, the amount of money. Often you can put the amount of money in dollars, and that will be converted to Bitcoin or cryptocurrencies for you. And you press send. And that's pretty much it. So the service behind the scenes, the app will do all the crazy stuff. Sometimes the app does not even use blockchain. We have off-chain transactions. It's pretty much like the app taken from one, given to another one. But yeah, that's pretty much how it is traditionally used. It's very user-friendly, and most of the time it's using barcodes and QR codes. Yeah, there's no crazy complexity to do so. And I forgot the other question, JJ. I apologize.
That is okay. I think you pretty much covered it. It was, yeah, just how will it be used? Do you think more and more vendors will be accepting it into the future as a form of payment?
It is hard to say. It really is hard to say, because what happens now when you make a payment with Bitcoin, most often, and by the way, 1 or 2 years ago, I don't remember when, I believe 2 years ago, you could pay your state taxes in Ohio in Bitcoins. And I believe that was over now, because pretty much nobody or very few people used. a handful of people. But what happens often is when you make a payment with Bitcoin, the volatility is so huge that the business receiving that money immediately translates Bitcoin or converts to dollars. Only very few companies actually hold Bitcoins. Again, because of the huge volatility, people still prefer dollars. So if it's going to be widely adopted or not, it really depends on this volatility. Do we continue to have this volatility that we have right now or not? When it starts shrinking and going away, that's when I believe more and more organizations and companies will accept Bitcoins and cryptocurrencies. It's changing now. Some high-profile cases like Tesla, Mark Cuban said that, I believe the Dallas Mavericks, and other organizations, they said, if you want to buy a Tesla, you can use Bitcoin now. Or if you want to watch a game, NBA game, you can use Dogecoin. Well, not a lot of people are doing so, to be honest. And at the same time, that's very nice for these companies because if you go and say, well, I'm accepting Bitcoin, guess what? Bitcoin price will go up. And at the same time, we have your pile of Bitcoins in your assets. So just as a strategy of saying, I accept Bitcoin, even if nobody uses, will raise the valuation of my Bitcoins a tiny bit. There's a lot of strategy there, business strategies going on.
Gotcha. All right, I'm getting a lot of comments of thank you, and we'll hope there'll be another session, so we will certainly talk about that. I'm going to ask one more question, and it is from, let's see, Perry. In your opinion, what are the most promising applications of blockchain technology yet to be brought to market?
For some of the applications that are amazing, tracking of anything, like tracking food, tracking diamonds, tracking vaccines. These are like happening right now. Some of the most promising applications to me are related to IDs, like digital identities. Right now, I have this boring thing called a real wallet that I have to carry with me. And inside my real wallet, I have a driver's license sitting there besides my credit cards and other IDs, Miami University ID. So why don't I have that on my cell phone together with my cryptocurrencies inside the same wallet? So these are some applications that will come soon. Identification. There are some interesting applications popping up, kind of controversial now, like vaccines. Like if you got your first and second shot, you can have a proof now on an app on your cell phone. And that app in New York, at least, it's running on top of a blockchain developed by, I believe, IBM and others. So yeah, I mean, these are some applications I believe. I'm really looking forward to see IDs, to see identification on a blockchain so that we can get rid of real wallets and just carry the virtual ones.
I'm all in favor of that. All right. Well, Dr. Carvalho, thank you so much for extra time and during a busy week and for an awesome presentation. Very enlightening. We really appreciate it. To all of you watching, thanks so much for spending some of your time with us today. We hope you'll take part in our other webinars. I'll specifically shout out Alumni Weekend, which will be virtual for one more year. But if you want to check out all the events we're doing for Alumni Weekend, the second weekend of June, you can find that on our website, alumlc.org, under the events, and or I'm sure Google Miami University Alumni Weekend. You'll figure that out. But thank you for staying connected to Miami. And as a reminder, the recording of this will be available. It's a couple hours later this afternoon before YouTube puts it up on the same registration link if you want to share, rewatch. Other than that, I think we are all good. Any last words, Dr. Carvalho?
I just want to say thank you so much, JJ, for the invitation. And we'll be working together, trying to develop perhaps a series or even hands-on workshops over the summer. So keep an eye on the announcements from JJ and our colleagues from Alumni Engagement. And thank you so much for listening to me and for the invitation.
Well, thank you again. And everyone have a great day. Love and honor.